Welcome to today's lesson. Today we will be covering adjustments. We will be working through a question provided by the Department of Education in the Western Cape. It is activity 4. So the information below relates to Tony Limited that was registered with an authorized share capital of 1.5 million shares. The financial year end is 30th June 2020. The required ask us to indicate how each adjustment, which is reflected in the answer book, will influence the relevant financial statement, and we need to use a table provided in the answer book to answer. When they say show calculations, please remember that part marks will be allocated for all steps in your workings. Now let's have a look at a pre-adjusted trial balance on 30th June 2020. Now, pre-adjusted trial balance means that these numbers are not the final numbers that will go into your financial statements because there's still further adjustments that need to be made. So let's look at some line items. The first one I want to draw your attention to is retained income. Now, you don't know where the retained income is an opening and closing balance from this pre-adjusted trial balance. A date is not provided. A way to help you is by looking at the nominal accounts. You can see that the income and expenses are still reflected under the section. And what that means is that income and expenses have not been closed off from the income statement to the final accounts to give you the final number of profit after tax. Remember, profit after tax is calculated as income minus expenses. So if these numbers are still sitting in your nominal account, they have not been closed off and they have not calculated profit after tax, which therefore means that the retained income number is still the opening balance. Remember, profit after loss is a line item that is closed off to retain income. Another item I'd like to draw your attention to is equipment. Equipment shows two line items, equipment and accumulated depreciation equipment. This means that the equipment balance alone reflects the cost of equipment. If there's only one line item for equipment, then it's fair and safe to assume that that will be the carrying amount. The carrying amount is calculated as cost minus accumulated depreciation. Another item to remember is for provision for bad debts. It is a negative asset and it's subtracted from debtors control. Bank and SARS income tax are both debit numbers. This implies bank is an asset and SARS income tax is an asset which SARS owes you money either because from last year's assessment they owe you a refund or you've made prepayments for the current year. SARS PAYE is on the credit side liability, meaning you owe SARS money. In the nominal account section, you will see all sales and other income like interest on fixed deposit and rent income on the credit side. Expenses are reflected on the debit side. However, when you are working through a question that has a trial balance, please use your pen or highlighter or pencil to please circle or highlight the item called dividends on ordinary shares. This is not an expense or an income because it's not a line item in your income statement. Why is this? Dividends is attribution of profits by the company to shareholders in the form of dividends. It is therefore a transaction with shareholders. If you recall, the definition of income is the income statement is transactions that do not occur with shareholders are reflected in the income statement. So therefore, dividends on ordinary shares is neither an income nor an expense and is separately disclosed and closed off to your final accounts. Okay, now let's switch over to our first transaction. There was defective stock costing 6,000 Rand that was returned to manufacturers. A physical stock count at year end revealed stock on hand to be 427,000. So, we currently have in our trial balance 438,000 value of trading stock. Now, if we return 6,000 due to being defective, that means that there is still a difference between the final stock count of 427,000 and the balance that we will have after subtracting the 6,000. So if we must then see what is the difference between the 438,000, which is our balance in the trial balance, less 6,000, which is what we reduced the stock by for the defective stock that was returned. If we subtract the final balance, which we must have in our books of 427,000, then that will show there's still a difference of 5,000. So the difference between the amount in our trial balance after adjusting for the defective stock versus the physical stock count, there's 5,000 Rand worth of stock that is extra in our books and needs to be written down. So this will be reflected as trading stock deficit, which sits under operating expenses. If you think about the balance sheet now, the balance sheet line item that was impacted was inventory, which sits under your current assets section. And what is the balance of inventory? Well, we know as per the physical stock take, it will be 427,000. The adjustments of the 6,000, which would have reduced the balance for the return stock, minus the 5,000, which is the trading stock deficit, will give you an imbalance of 427,000. Okay, let's look at another one. Further bad debts of 4,000 are to be written off. Now let's go back to our trial balance to try and understand what is there. So if you look under your normal account section, there's already an expense of bad debts for 2,800. This means we need to write off a further 4,000. Okay? So under our operating expenses and bad debts expense, we are then going to do an adjustment for the 2,800, which we already have from our trial balance, plus the 4,000, which will then give you a new bad debts expense of 6,800. Now, if you think on the balance sheet perspective, bad debts impacts our debtors control, or in other words, trade debtors. So the balance that will be impacted here will be trade and other receivables under current assets and what will happen is the balance of 80,000 will now be reduced by the 4,000 additional bad debts. To give you a new balance for trade and other receivables, which is the trade debtors balance, of 76,000. Remember, the 2,800 was already recorded, so it would already have been adjusted for. We are just focusing on the 4,000. Our next line item is the provision for bad debts is to be adjusted to 6,080. Now, it's very important for this type of question to the English. Here, it needs to be adjusted to a new balance. If it said by 6,080, that would mean something different. That would actually be the amount you need to put as your adjustment. But here we need to still calculate the amount we need to put as an adjustment because we needed to get to 6,080. So the question is, what is our current provision for bad debts amount? Now, provision for bad debts, if you recall, I said it's like a negative asset. That's why it's on the credit side. It's 10,400. If you need to get it to 6,080, that means you've got to decrease it. So you need to decrease it by 4,320, which is the difference between the current balance and the new balance. So you need to adjust it by 4,320 to get it to the new balance. Now let's think about that. If this is a negative asset, we can think of it in terms of debit side, it will decrease, and the credit side, it will increase. So it's opposite to the asset rules. On the debit side, it will decrease. On the credit side, it will increase. So we are now decreasing the provision for bad debts. So we are going to debit some line item in our income statement by 4,320. And the line item we're going to be debiting is called provision for bad debts adjustment. And this will be an operating expense. Now, why is it an operating expense? Is because we are debiting. Remember, debits are expenses. So this is going to be under the operating expense. If the amount was actually being credited because you're increasing that negative asset, then it would be an income in your income statement. Then on the balance sheet side, under trade and other receivables, which is a provision for bad debts, this also sits under your current assets. Your provision of bad debts will sit at 6,080. Please remember that provision for bad debts is a negative asset. It is subtracted from your trade debtors balance. So here our trade debtors balance is 76,000. In the balance sheet, we will subtract the provision for bad debts of 6,080, which will leave us with a net trade debtors balance. The next adjustment is the advertising contract has been paid for 13 months. This is a very, very popular type of adjustment, whether it can be rent income, rent expense, or advertising. So where something is paid for greater than the financial year period. Remember, our financial year period is 12 months. So here the advertising contract has been paid for 13 months. Now, I like to think of this in terms of maths, so I'm going to give you a simple way of thinking of it. If we go to our advertising expense of 11,700, let's assume 1 month expense equals to X. 13 months will be 13 times X, which will be 13X. So that's 13 months of rent, and that is 11,700. If you solve for X, X will be 11,700 divided by 13. That will give you X, which is a monthly rent of 900. So we have overpaid for 1 month more. So the calculation will be 11,700 divided by 13. What that means is we need to reduce our advertising expense in our income statement by 900. So we are going to say 11,700 minus 900, and that is going to be our new advertising expense of 10,800. So which line item will be affected? It will be advertising, which is an operating expense. Then on the balance sheet side, we have prepaid an expense for 1 month, which is worth 900. So we are going to then recognize an asset called prepaid expense, which sits under trade and other receivables by 900. Now let's think of the journal entry here, just to show you how it works out. We are creating an asset, so we are going to debit prepaid expense for 900. And we are crediting advertising expense, which sits in our income statement, by 900. And this makes sense because by crediting an expense, we are decreasing it. And that's what we want. We want to decrease the expense of 11,700 to 10,800. Okay, let's focus on another one. The tenant, here's the rent one. The tenant has paid 2 months rent in advance. So let's go look at our rent amount. Rent income is 78,400. So let's think of it again as the month's rent equals X. They have paid 2 months in advance. So in total, they've paid the 12 months in the financial year plus 2 extra months. So 14 months of rent is equal to 78,400. So X is equal to 78,400 divided by 14. Bring up our calculator. That means 1 month's rent is 5,600. But here we paid 2 months in advance rent we received from the tenant. So that will be 5,600 times 2, which will give us 11,200. So the new income amount must actually be the 78,400 from the trial balance minus the amount paid in advance by the tenant of 11,200 to give us a new income amount of 67,200. Now, the item and section that will be impacted is rent income, which sits under other operating income. Looking on the balance sheet side, we are going to recognize income received in advance from the tenant, which sits under trade and other payables. And the amount will be the 11,200 amount. Now, let's just think of that from a journal entry perspective, because I always find it useful to think of journal entries. We are recognizing a liability of income received in advance. And because we are increasing a liability or recognize it for the first time, you're going to credit it by 11,200. So that means that a debit will be to rent income. Now, by debiting an income, we are actually decreasing it by 11,200, which is exactly what we want, because we want to get the amount that's sitting in our trial balance, which is 78,400, to be for 12 months, which is meant to be 67,200. So we need to decrease the rent income by 11,200. Okay, in the previous lecture, I mentioned that we'll be working through additional company transactions or company unique transactions. And here's an example which is relating to auditors. So 8,000 Rand is still owed to auditors. So that means if we jump to the balance sheet perspective, we still owe auditors 8,000 Rand. So we need to recognize a liability called accrued expenses, or you can call it expenses payable. And this sits under trade and other payables. Now, if you go to our balance sheet, our trial balance, you will see that under the nominal account section, there is an expense in our income statement or nominal account section of 36,000. This means we need to increase that amount. So it will be the 36,000 plus the 8,000 we still now have to owe the auditors, and we just recognize as a liability. So that will give you a new total of 44,000 that needs to be reflected as an expense called audit fees under your operating expense section in your income statement. Now, so far we've worked on quite a few fundamental ones. So I want to wrap up this with a journal entry. We again created a liability, but this time it's called accrued expenses, and we are recognizing it by crediting it by 8,000 Rand. This means we are going to debit audit fees. Now, audit fees is an expense. By debiting it, we are increasing it by 8,000. And that's exactly what we need to happen. We need to increase our expense amount from 36,000 to 44,000 because of the 8,000 outstanding amount. Now, I hope that working through these 5 examples has provided you a thinking approach to understanding different ways that adjustments can be asked. Now, this is not your typical approach in exam because generally you would have to adjust an income statement, balance sheet, a cash flow statement. But this is also sort of question that can be asked. As you can see, it is part of the syllabus and revision exercises, meaning that you need to be able to think of adjustments from any angle. Now, the best way to do this is through multiple practices to become familiar with adjustments, because even though scenario names and amounts may change, the typical type of adjustment is similar across different years of tests and examinations. And you can even have a look through past NSC accounting exams to see that these come through very similar. So you just need to learn the methodology of answering it. For example, how I explained to you the advertising contract, which was paid for 13 months, and the rent that was paid for 2 months in advance. Applying that calculation methodology will help you to easily work through any type of question with any amount for that type of scenario. So what we are going to do now is we're going to end off this lesson with these 5 transactions, and we'll come back with part 2 where we work on further adjustments using the same format, and hopefully by then you'll be able to work with me and understand them with greater in-depth after going through this lecture. Thank you for your time.